about patterns and divergences today. Let's go ahead and kill the music. All right, yeah. So what's up with the music? Yeah, it is music by JT, produced by Rarely Accepted Productions, and I paid for it, so I'm gonna play it. Right? Okay. So yeah, that's my new intro music. Anyway, no one really cares. So let's talk about patterns. And I'm sorry, patterns. That's not what we're talking about. We're talking about divergences, but they do make little patterns. So I like to trade divergences. I do somewhat pattern trade, but just to measure. All right, yeah, I do pattern trade, but I do that just to get the measured move to see how far it's going to go or something like that. We'll do a video on patterns. So I am a swing trader. I wish I was a day trader, but I have a real job. And as you can see, poor crypto vacation right now, right? It's been a couple days since I shaved, but I have to go back to work tomorrow. No, in a couple days. And I'll have to shave again. So we're going to talk about patterns and what they mean and all that good stuff. So we have regular divergence, we have hidden divergence, and I'm not really going to talk about exaggerated divergence because, first of all, it takes me forever to find patterns, and I'll show you a better way to start finding patterns depending on your trading style. So, like I said, I swing trade. I wish I could day trade, but real job, don't have time. And I would either make a lot more money or lose money faster. I'm not sure. We would find out. Patterns. Anyway, what we'll talk about here is let's get out the little paintbrush tool. And let's say I want to explain the biggest thing that no one ever explained to me when I first started watching these videos. I think this is always an assumption. They do it and they just assume you realize it. So, when we're talking about bullish, right? I'm sorry, when we're talking about bearish, yeah, see, that's the thing no one ever explained to me. When we are talking about bullish, we're touching the tops, right? The top of here, and let's pull up the RSI. And this is not divergence yet. I'm just trying to explain. So we're talking about measuring the tops, doing stuff off the tops depending on the angles. That would be a bearish thing, right? So if we have lines on top of the candles, what we're trying to find is what's going to become bearish. If we have lines below the candles, I always forget I have hotkeys. If we have lines below the candles, and the candles are resting on them, and below our oscillator, and the candles are resting, we're looking for something bullish to happen, okay? And so the way I kind of tell myself this is, if the lines are on top, it's a resisting, and it's creating something bearish, and if it's below, it's supporting, and it's creating something bullish, okay? So I never realized that. I thought, for the longest time when I first started trading, I in my head, I was like, oh, if the alligator goes that way, it's bearish. And if the alligator goes this way, it's bullish. And I totally failed and had a lot of wasted money because I didn't understand it. So that's really what I'm here, is to help people understand. Now, the first thing we're going to talk about is a couple of bearish. I found some bearish scenarios on Algorand, and I went ahead and did them up here. And when you look at some of these, so right now we're in a lower time frame, and for me personally, if I'm in a lower time frame, this is the RSI, and I tend to use the RSI in higher time frames, like the daily. If I'm in a lower time frame, I will tend to use the stochastics RSI. And this stochastics RSI actually shows little divergences, but it doesn't necessarily, I don't like them. They give me a clue to look, okay, but they're not very accurate at all. So this is saying from here to here, yeah, that one is somewhat accurate, right? But when I look at this, what I see is this right here, from here to here. Okay, so we're talking about peak to peak. So we have a peak, and then we have another peak, right? And we have price making a higher high, while the, let's do another one, while your oscillator down here would make, is it not going to make a lower high? And these two should be lined up. So let's say it was here and it had a high here, but then the next one was here. So while price is getting higher, momentum is getting lower. That's really what's happening right here, okay? So that is our scenario for the bearish scenario, all right? So right here, the price from peak to peak, okay? Because some people will draw these crazy things and there'll be 5 peaks stabbing through. To me, once they've stabbed through, and you know, I'm not the expert on this, but I will tell you what works for me. Once the peak, another peak is stabbing through, it has made it irrelevant, right? So right here, let's spread this out so it just looks better, right? So we have these 2 peaks, and I don't really use the top of the wicks. I like to use the candle bodies. Some people like to use the wicks, some people like to use the candle bodies. But what I really like to do is make sure these, see my white line? I want this lined up. Okay, so with this, if we did that, that lines up. And this is basically lined up here. We could move it to here. So the tip of this little peak right here, because if you look at it, it goes down and kind of starts to come back up, right? So this right here, see how they are going the opposite directions? They're not parallel to each other. This one's going up and this one's going down, okay? So it's saying, yeah, price is going up, but people are getting tired. They're getting low. The momentum, the excitement of the whole thing is dropping, and you see what follows it, right? Boom. Now, this is a awesome example, and this is not what always happens, okay? But this was one where the measured move, I mean, most people would be like, yeah, we got our 6%, let's get out. But this one just kept going. I mean, this could have been a 22% if you would have stuck it out. I mean, I don't think I would have went this far, but yeah, it would have been even more. Somewhere around here, I would have been like, yeah, that was a good trade. I'm out. Some people stick it out. Maybe I would have moved my stop loss, but when it come up here, probably would have got tapped out anyway. Now, that is our regular divergence, okay? Super clear. You can see peak to peak, peak to peak, regular divergence. So regular divergence, price is going up, momentum's going down, right? Regular divergence. Now, over here, I think we have the opposite, right? Price going down, right? Price going down while momentum's going up. So if we find this here, we've got this momentum to here, right? Now, it's not a lot. It's not a lot. If you really look at it, it's not a lot. But if you go like this, you can definitely see this is coming up. And this is hidden divergence, okay? So as long as we're on the top, it's talking about hidden bearish, right? And hidden bearish sometimes can surprise people and get some real big moves, and sometimes not, okay? So right here, although a lot of action happened, nothing pierced through here. From peak to peak, price went down, right? So it found a lower low, but momentum found a higher high. Momentum was going up, price going down. Here we have the hidden bearish, right? So from here to here, it come up, it got a lower low, momentum got a higher high. That means we have our two opposing angles. And if you would have taken this for a short, really? Taking a short here, you could have stopped here at 4%-ish, but could have got up to 5% on that, right? With a decent stop loss, probably up here somewhere. You definitely wouldn't have tapped it again, but a lot of people would have took off here, right? That's a good spot. That's just as good of a spot. I mean, honestly, right there, if I would have took that, I probably would have been out right there. If it came back here, that's probably where I may have moved my stop loss. So who knows, right? All right, so there's your hidden, and I think we have another regular divergence right here, from here to here. Yeah, there we go. Another regular divergence. Boom. Now these don't always pan out, especially if they're smaller ones. Especially in the smaller time frames, you get a lot of movement. I do like checking out the 1 day chart, 10 hour, 22 hour, even 4 hour, 2 hour, 1 hour. That's like I said, I am a swing trader, so I'm looking more over the course of weeks to months. I don't have the time to day trade. I tried for a while, and I made some real good trades. I was like, hey, I'm great at this day trading thing. And then I made some real bad trades because I get busy. I have meetings. I have to go do things. I come back. I forgot to set my stop loss. I was waiting for it to get a better point. Yeah, so until I don't have a real job, I'll just be a swing trader. So one of the other things I want to talk about is, yes, these help you look, but if you notice from here to here, it's saying, hey, there was one. To me, I don't really see it. I see this. I found that on my own without this. One of the other things is we have the VMC Fu Manchu Cipher B. It's like Market Cipher B, but it's the free version. And I'm going to tell you right now, I paid for Lux Algo. Kind of wish I would have paid for Market Cipher. Eventually, I probably will get Market Cipher, but I can only spend so much money at a time, right? Now, this is super clear with Fu Manchu, and it's even better with Market Cipher. I've seen a lot of people use Market Cipher, and I'll tell you what, CryptoFace, he did it right when he made Market Cipher. Even this copycat thing does not work anywhere near as well, but if you see the momentum waves, I don't want to call them RSI because they're not. I think they're somewhat based off the RSI, but these momentum waves are awesome. And they like to have little red dots saying, hey, it's about to go down. It's as high as it's going to get for now. So yeah, this is super great right here. Same thing. Boom, from peak to peak. And the peaks are way clear on Market Cipher or VMC. You can see exactly where we came and found these earlier. Okay, yeah, there's all three that I found earlier. And now the one thing I want to talk about is when I move to the higher time frames. Let's go to the regular RSI on the higher time frames. I like to use the regular RSI. Okay, and I think we actually did this with Bitcoin. All right, we used Bitcoin on the higher time frames because I didn't want to have a bunch of lines all over the place. Yes. So on the 4 hour, you can see these match up pretty well. Right here and right here, right on the 4 hour, they're good to go there. And you're looking for bearish, and it come up a little bit, but then it got real bearish, right? So right here, if you want to look here, it did come up. Even if you'd have got in here with a good, right there. So yeah, you'd had to have a decent stop loss, but you know, definitely could have picked up 11.5% on that one. On the 4 hour, ooh, did I just move? Okay, there we go. All right, but what I like to look at is the daily. Going to come back here to the daily. And on the daily here, these got, of course, they're going to get moved around, right? Because we're looking at a 4 hour. So on this one, it's almost straight. It's almost straight right now. You can also look at this on the daily from this peak to that peak, which is this peak. There's your definite divergence right there, right? Now we can show you some bullish divergence, and that is basically, we're looking at the same thing. And I'm gonna put a pattern let's put it right there. Okay, we're going to throw a pattern up right there, or maybe it's right there. I don't know, because I don't know where my camera's going to be until I go to edit. So it's either going to be there or there. Maybe it's going to be there. But we're going to throw up the pattern again to remind you that the bullish is under the bottom, right? And price is going down while momentum is coming up, right? So really what you want to think about is the divergences is price and momentum are normally following each other. And when they're not following each other, something's about to change, right? So if we're in a bullish scenario and price is going up, momentum's going up, and then suddenly price keeps going up, but momentum starts to come down, that means it's cooling off. And that's when you want to start looking for your divergences, right? Or if price is coming down, momentum's coming down, and then suddenly momentum starts to come up, you're like, ooh, wait, price is still going down, momentum's coming up, might be starting to get bearish or bullish. So that's really what we're looking for. Here we go. This is going to be your standard divergence, right? Price coming down, momentum going up. That's going to be bullish. And you see right here, it became bullish, right? That's kind of, when is this? 2021. Yeah, that was the start of, so in May, we all got psyched out, right? We're like, oh yeah, it's going up. And then it's wham. It slammed us. And as this pulled this off, momentum started coming up, and boom, we got the actual bull run to finally come up, right? So yeah, that's what we have right now for divergences, and this works in either different way. The hidden divergence, we didn't find the hidden bullish divergence, but the one thing I wanted to show you is if you got the VMC, like I said, this is the free one. Now, I do caution, these are not always accurate, okay? But it makes you go look, right? And that's what I'm going to show you right here. We come up here and we go to settings. Now, there's a lot of different settings in here. We come down here, regular divergences, hidden divergences. Now, what I'm going to tell you right now, I leave the hidden divergences off because the hidden divergences are terrible on this, okay? Regular divergence. And I think there was show us our RSI. I can't remember if these, I'm gonna leave the hiddens off. Which one was that? Okay, yeah. So since we're not using the RSI, we're not going to use it. And that should be fine. Okay. So now that we have this, what I like to do is I come through here, and this is a perfect example. Okay. This is saying, hey, we've got some divergences here, and it makes you stop and look and go, well, what divergences, right? So the divergences we have right here, you're going, that doesn't even line up, right? But what's this? So what I do when I see these lines, they make me look and go, that's going down. It's saying something's happening up here. So what I'm going to do is remove that. Did I remove something I wasn't supposed to? I did. Okay. So what I like to do is remove that, and then I like to Alt-T for trend line, right? And I come back here to this little thing, and I go, Alt-T, trend line. And I go, okay, you're telling me something's here. I don't necessarily like the look at that, so I don't believe that. And I'm gonna Alt, and then I'm gonna say, okay, so it's back there. Let's see what you're saying here. And I go, I'd see that. I do believe that. I kind of like that. That looks good to me. But then I'm seeing this dot over here that it's not even calling yet, and that's the one I'm looking at, and I'm going, there's a peak. We have a peak to peak right here. And really, if we did this, okay, we have uninterrupted peaks. And see how when I have my line here, that dotted line over here, the dotted line is higher, right? So it's still going down. See, still going down. That is a peak to peak. and that's a peak to peak. Now, does that mean this peak is wrong? Not necessarily. I just don't like it because it has too much trash in it. And it is a stronger case when you look at it that way, right? So it's really about you. Make your own rules. Stick to your rules. What do you decide to do? Me, I don't like when it goes through it. Maybe I missed a couple of trades, but this is its own little peak. I look at that. It's still going to tell me the same thing. I just don't like that. So that's one of the other things. So yeah, as you're coming through some of these, you're like, what is that? That doesn't look like much to me, but if we grab that, find out where that dot is, let's go from here, right, to there. And that's the thing. Sometimes you have to zoom in, you have to really look at it, and you go, okay, I don't necessarily like that because that would be there. But if we looked at it from here, right, and that's the thing. To me, that's still a peak. That's still a peak right there. That other peak was kind of there. So that's where I say these automated ones aren't perfect, but they make you look and you go, okay, now that I can get behind. Where the automated one was, I don't trust that, but I see this and I'm going, yes, that's definite divergence. And what happened? That's when everything went down. So that was a huge one. Yeah. In 2 days we went down, maybe 3 days, 4 days, we went down almost 25%. That was a big one. So yeah, it was there. It was automated. It's saying it's there. Like I said, I didn't like how it was. And at the time, I probably missed that because I didn't like where it was. But what it does do is it makes me point it out. It makes me draw other things, and it makes me take a second look. Just like the bullish right here. They're going to make me draw. I'm going to draw a line from here to over here. Kind of looks odd to me, but the line from here to there looks good to me. You know, it would have went up a couple percent, and that's divergence. So yeah, that's really all I have on the divergences. And once again, like I said, for me personally, I like the VMC, Fu Manchu. The other thing I like to say, and so the RSI is a slower moving indicator. The stochastics RSI is a faster moving indicator. So if I'm looking at the daily, I'm going to look at the RSI. If I'm looking at hourly or shorter, I'm definitely going to be looking at the stochastics RSI. Like I said, day trading's fun. When I was day trading, I was down here on the 3-minute time frame. No need for the RSI. Looking at the stochastics. And to me, if you're going to day trade, I'm just going to use engulfing candles and the zones, right? We're going to be looking at this. This right here would be my day trading setup. Ooh, is this today? What's happening? In the last 3 minutes, something. We got some craziness going on in the last 3 minutes while making this video. This is where I would have, see? And that's why I'm not a day trader, kids. I've been making this video for about 10 or 15, 20 minutes, 30 minutes, and this is what I missed out on right there. 0.6% doesn't look like a lot, but so yeah, just the way it was made. But this would have been where I would take right here. So we have an engulfing candle right at the point of interest. That's where I would have jumped in. So yeah. Divergences, thanks for watching, and we'll see what we can do about a pattern video coming out soon. Thank you. Hey, thanks for watching. If you liked it, hit like. It'd be awesome if you hit subscribe. Appreciate it. Either way, have a great day.